good afternoon, good evening, good night, good morning, as I know that we are truly global today. It is my privilege this evening to chair this session, to be the moderator for this session. And really, I look forward to, as I know all participants are looking forward to this session, because truly the banking sector is the engine of growth, even as we look forward to the great wealth transfer. And without further ado, I will hand over to our expert panelists, because we will then be able to get a global perspective on things. And so, Whiskey, I heard Kamala refer to you in that term, which is easily pronounceable, and which even me, I can enunciate. I hand over to you so that you can share your words of wisdom to us this evening.
All right, thank you very much, Ingrid. My name is Rizky, but please rest assured that I'm not harmful. Once again, very good morning from Jakarta, very good afternoon, good evening, and Assalamualaikum, salam sejahtera, selamat pagi, Professor Garrett. Shalom, Om Swastiastu, Namo Buddhaya. I'm used to begin the introduction like that because we in Indonesia we have 700 ethnic groups here, and so much related with all of the primordialities, interculturality, intercultural factors matters a lot in here, and so I am flattered that Kamla and Ingrid mentioned me as a special expert. Please, I'm just simply, like Peter said, I'm simply just a nocturnal Homo sapiens. And so, I think that, right, Peter, I do agree with you. And thank you very much indeed. My sincere gratitude indeed. I am invited here by Peter and my good friend Sophia in London to be connected with Kamla and also Professor Garrett. And today I'm very happy to meet the very well-known Mr. Ronald Harford. I read about you on the internet, and I'm here to discuss, and I'm willing to learn more because I'm just a lifetime learner. So yes, I've been around. I've been in several academics or even professional situations, but I love doing some dialogues, and allow me to express that being in the multicultural situations, I've come to the ideas that I do believe that we can work hand in hand because we are in a dire straits to preserve the better world for the next generation. So banking industry, I do believe, can do a lot to support that. And speaking about bank, allow me to begin from this phenomenon. Just in COP26 in October, a few months ago, I was quite amazed by Greta and also several other fellows who media called them as activists, who called on banks to stop funding climate destruction. I was quite a naive banker years ago by thinking that banks are quite safe from the issues of climate destruction because we are not at the front lines. That's what I do. That's what I used to believe previously. But now it seems that now in the future, we have a red alert in banking industries because public gets smarter, especially they are now trying to find out, to seek out who is behind all of the funds possessed by or sourced to the companies who are accused to abuse the environment. So at some points, I can understand this kind of anxiety because seeing the data, more than 4 tons of per capita CO2 emissions released in 2020, 2021. It means every single person, nearly 5 tons of CO2 well, we are responsible for that. And now the question is, should we wait until 2050 to achieve the net zero? Why can't we begin now? And that is also the issue among our fellow activists, our fellow friends who have a lot of concerns in environment. Not to mention another problem comes from the socio-economic uh, well-being, where 85% of worldwide population live under 30 US dollar per day. And also 9% of worldwide population, even worse, they live in extreme poverty. We call this here below poverty level, USD 1.90 per day. And during COVID-19, in my last year's paper in Chicago, I noted that 255 million jobs lost reported by ILO. Also 97 million people living in poverty, and that contributed a lot, significantly, to global extreme poverty. And adding the salt into the wound, the shift of work and consumption behavior from working from the office into work from home, work from anywhere, brought some subsequent mental health problem. And how about the next generation? 58 million primary school age children cannot have access to proper education, including in Indonesia, South Asia, and even in Latin America and Caribbean region as well. So this is the worldwide, and I do agree with Kamla, this is a global situation. This is the global problem that we have to take, and we should work hand in hand to uh, cover that and to make a better world in the future. But along with the negative news comes some new promising ideas. My special honor to these countries, Bhutan, Suriname, Panama. Yes, as an Indonesian, I'm also pleased to know the reality that we have some cultural bond with friends in Suriname, especially with Java ethnicity, if I'm not mistaken, and also Indonesia has been a long time partner for Caribbean region. We have two banks operating currently in Cayman Islands, Rakyat Indonesia, Bank Rakyat Indonesia and Bank Mandiri. Those are the two renowned banking groups in Indonesia. And now we are trying to explore the sustainable finance in terms to achieve the reforestation and all of the SDGs, the 17 goals in the resolution 2015. And another good sign is about the renewable investment, nearly 70 billion already spent in 2020 for all of the renewable investment sources. So this is a good sign that we can start from now. This is a good sign to see that ESG investment gains prominence during 2021 until the beginning of 2022. So now I see the hope here. And now the question is, this is the main question that often raised by some of my fellow friends and also even me myself. And the first time I learned about sustainability or sustainable finance. So what can a bank do? Now, we are often trapped, please correct me if I'm wrong. We are often trapped with the short-term mindset. Short-term profitability is good, short-term financial indicator is good. But now we have come to the point that we have to remember that long-term horizon should be at the backbone. This is what I've been dealing with day by day. It's not easy to do this, I know, and I totally agree with that. It's not easy to implement the long-termism in banking industry, especially provided that some of the banking executives, some of my colleagues, not just in Jakarta, are trying to still staying in the boundary of the short-term mindset. But we have to take into account that all of the decisions in financial sector, every decision that we take will bring impact on ESG, environment, social governance, and that's why we need to consider as well the ESG factor into the decision making. And from this time on, I believe that this will be very much important. Not to mention that the future will be changed. I agree with Alice just now that digital will take over, especially will replace digital money, will replace fiat money, and then that is so much intriguing. And if I may add a little bit more points for that, the new object in business, new object of investments will come. And also that's why we need new rules and procedures, governance, risk management, compliance. We need the new more new adaptive procedures. We need some new agility. We need some new projections, knowing that after the calamity, usually, as long as I know, it's difficult to go back, to return back to the exactly what we used to have previously before the calamity happens. So we are now practically in the anomie situation where the previous values may not be suitable, but the upcoming values would bring some unknown risk. So especially in terms of the impact to the social and environment. And also we have to remember as well that social media is growing nowadays, and our friends journalists also go online, and we need to believe, we need to bear in mind that the next years, especially in the next 2 decades ahead, might not be as easy as we used to have previously. And at some points, I do still believe that banks is one of the important players in terms of the helix model, quadruple helix model, quintuple helix models. We have some spinal roles to initiate the economic growth locally, nationally, worldwide. The economic system, the money is in the business. Government cannot do alone. It should be public-private partnerships, and also education needs the support as well from banking industry. And here, if I may also add into this arena of the new thoughts, of the latest thoughts, that in the future we need to embrace spiritual-based ecosystem. It is a factual situation that people do some business actions, people do some social actions based on the spiritual motivations. So in other way, we can say that it affects all aspects in life. It affects the ethics, governance, profitability, regulatory system, decision-making in the government, poverty eradications, education, and other socio-economic systems, bioenvironment conservations, and also in the so-called, quote-unquote, the brutal years ahead with the virtual social capital. So allow me to provide a little bit example of what I know. Well, I have seen some friends, some very good friends. I have a lot of best friends who are Brahmin Hindu, or even some Buddhist friends. Oh yeah, by the way, 16th of May is the Vesak Day, so happy Vesak Day, and also happy Idul Fitri, and belated happy Easter for all of us here. And yeah, I've got a lot of friends teaching me about their values. I've got some Chinese friends teaching me about their values. I've got some Jewish good friends teaching me about the values of how they invest the money, how they do the business. And those are magnificent. Those are brilliant. And but however, I'm not in the capacity to explain that. It would rather be them to explain that, because I believe they know better than me. But allow me to at least share about what I know, seeing that Kamla also told me about speaking about Islamic finance. This is what I know, and I am not a scholar in Islamic philosophy. I am so much learning about sustainability. including in banking industry, especially related with the poverty eradication and also socioeconomic well-beings. But when I firstly engaged in Islamic banks, when I was firstly involved in Islamic finance organization as well, so I began to be amazed by this philosophy, especially driven by the Tawhidic human relationship, transcendental relationship between human and God, and also horizontal relationship between human and all creatures on earth. So what can I understand is that Islamic finance, if we ask in simple, what is the objective? The objective is falah. Falah means welfare, all about the well-being, and especially to preserve the faith, soul, mind, offspring, and wealth. Under the bottom line, to perform good deeds on the planet as the vicegerents of God. And subsequently, this intrigues people, especially at least Muslims, to do business. They do business based on this. They do social actions based on this. We Muslims also should bear in the system that there's a prohibition of maisir or gambling, gharar, uncertainty, and riba, or the so-called interest and usury. With the business contracts, we share the wealth, and at the same time, we share the burden as well. And it comes to another deeper thought that I used to have at the beginning when the first time I learned about this. It's about the vantage point of dystopia in Islamic view, in Islamic economy. And I found that, okay, the teaching, it all converges into a perennial balance. So the progression of life for a noble end. Yes, every human will die in the end, but will it be a noble end? And have we found tranquility? Have we initiated for peace and harmony? Or how about the next generation? Have we prepared them for the new upcoming volatile situation, the more anxious situation in the years ahead, especially after COVID-19? How about the mitigation of afterlife? These all the teachings that will affect the micro level individually, or even meso level in the family, in the small organizations, or even in the larger organization, or macro level in the policy making at the government, or even international organizations. And all of these become universal values of virtue that touches the biological aspects, psychological aspects, social and spiritual aspects. And I thought this was merely just an academic thoughts, or even some academic manuscripts. But then I began to realize that, oh, the implementation about having this value happened to be real for years. And just last year, this is what we often discuss. I am still the member of Masyarakat Ekonomi Syariah, Islamic Economic Society. We have nearly 200 offices in all of the continents. The headquarters is in Jakarta, and every month we regularly discuss about sustainability, about the balancing, about supply and demand sectors, monitoring the situations, and also finding out how can we preserve the harmony, interfaith harmony, or even intercultural harmony as well. And so I was quite amazed by the last year's report in 2021. 1.9 billion Muslims spent about 2 trillion US dollar. And so this becomes reality to me. And not to mention equally, and vice versa, the Islamic finance assets grew to 3.6 trillion in 2021 as well, just last year, which was quite amazing for me. During the COVID-19, it grew quite significantly, not to mention the CAGR at the 7.5%. So the business is there, the money is there. And I agree with previously with Mr. Brown, who stated that money, no politics, right? So in in this aspect, I do believe that, well, when we speak about money, when we discuss about money, yes, any kind of system, it would be just like the choosing the menu on the table. If we go to the restaurant, this is just like another menu that everyone can try. Who can be the player in here? Anybody. I have seen a lot of banks, non-Islamic banks, who begin to initiate the Islamic compliant products because they see this, and also some banks, non-Islamic banks, they establish the subsidiary to focus in Islamic finance industry, or even the Islamic banks itself. Some of my friends who are still in the board of executives or board of commissioners until today, most of them are not Muslim. So anybody can tap into this market. Anybody can be involved in 279 billion of the imports during 2020, especially in these yellow country, Turkey, Saudi Arabia, Indonesia, and Malaysia as well. And not to mention about the 25.7 billion of investment in UAE, Indonesia, Malaysia, Saudi Arabia, Egypt, Turkey, be it in pharmaceutical, media, travel, halal foods, cosmetics, modest fashion, and of course Islamic finance. Why? Because now it converges into one idea. For Muslim, Islam is a way of life, so it touches a lot of aspects, and it brings the business. So the business is here. The players can be anyone, and so this can be another opportunity for everybody to tap into the arena. So speaking about the future, the potential of the future, I agree with Elise as well just now that in the future, digital is on the way. Now, I believe with artificial intelligence, when computer begins to think, when we can talk with robots, just like we can talk with our best friends, when they can learn, the new potential opportunities will come, but at the same time, the new impending risk will also come. So if we have a look here, our fellow friends at Oxford University, along with Reuters Institute, they did the research, remarkable research, I suppose, in 46 countries in 4 regions worldwide. What intrigued me so much is that the media and communication process go digital and more individual, and so do the risks and opportunities for banks. This is an intriguing fact. Some of the facts that I can discuss in here today. Let's have a look at the gap here. The gap grows further. This is an example from UK, but with the similar situations in any other else in the world. So previously we were relying so much on computer, but now the ecosystem is gradually but surely changing into the smartphone. And if we see here, social media is in the air: Facebook, YouTube, WhatsApp, Instagram, you name it. So another thing, a new emerging platform, like an example, TikTok. If we see here, the range of the most users of TikTok is between 18 and 24. This is, for me, is a golden range. They are in the nearly reaching the culmination point of their life, I believe. They are the young adults, and they begin to make some important decisions. They begin to make probably some decisions to buy new houses, to expand a new business, to get married, and they may need some banking services, and also they may come to us as a YouTuber with the team Solid, treated as a company, but unfortunately they don't have enough physical collateral to apply for any loan or any mortgage or anything, any financial support in banking that we used to have before the calamity. So now, how can we tap into this potential market in the future? That is the main question, because the generation is gradually changing. This is what I learned when I learned about the dystopia that previously we discussed about in the few slides just now. So at the same time, yes, they may have some splendid opportunities in the future for us in banks, but at the same time, some of them may not wise enough to think before they start posting something. So the risk is there. And if we see an example from Indonesia, yes, Indonesia is deemed as one of the largest markets in the world. I do agree with that at some points, even though in rural areas, we may still have some difficulties to find more stable internet connections. As I expressed to Kamla previously, when I go to rural areas, yes, okay, some connections may not still be stabilized enough because we are still in between Industry 3.0 to 4.0 and now moving beyond to 5.0. But speaking about the penetration, 75% out of 276 million population in the country, I think it's quite significant enough to consider that to see the phenomenon that even the conventional media here, I remember Alice said that he was the media expert, and I respect that a lot. Now the data shows that conventional media are even competing online. CNN in Indonesia, just for example, they go online on YouTube channel as well, and also some other renowned media here. They go online, and more people are willing to pay for online news with the more reliance on smartphones. So much depending, right? So much dependence we are with smartphone, with the technology. So I think, if I may humbly opine, in the future, related with corporate governance in the digitized world, we need to upgrade in the spirit of heuristic values of academics. We need to upgrade what we used to have, the vantage point, what we used to have in banking risk management. Previously, reputation in Basel III, for example, is viewed as other risk, but now no longer. I think we need to start thinking that reputation and ESG are interconnected, inevitable. So speaking about reputation is no longer about speaking about media coverage, or merely just speaking about advertisement, or speaking about press releases. No longer like that anymore. But nowadays, speaking about reputation, it means speaking about financial performance in the future. Speaking about reputation means vision and leadership, about workplace environment, about social responsibility and products and services as well. So it's similar with the holistic approach in governance itself. So it is now the time, I think, that we should begin to put ESG at the backbone of banking risk management for the future. And knowing that now the world is changing, especially the presence of COVID-19, apart from all of the predicaments that we may have last year or 2 years ago, or until recently, probably. Apart from that, COVID-19 expedites the new incoming of the digitization. So the question is, what problems are we trying to solve for whom in the world? How are we uniquely solving them by taking advantage of digital technologies? Yes, collaboration is the key. I do believe in that, because we cannot solve every problem all alone. So the next question is, how can we utilize this Industry 4.0, or even maybe now Society 5.0, how we utilize this to contribute to solve socioeconomic and bioenvironmental problems? For example, how can we use big data analytics and cloud computing to help financial inclusion and to help grow the middle low level of society in rural urban, for example. I've been dealing with microfinance that is now quite head-to-head at the same size with Grameen Bank, for example. I've been dealing a lot with that, transforming them into the new mindset of empowerment. With now they have about 12 million borrowers nationwide, and beginning to go also international, along with Grameen and some other microfinance companies. They are now operating like banks, but specifically doing more on the achievement of 17 goals of SDGs. This is another example also coming from the fintech industry, which will be growing. So virtual social capital and virtualpreneurs gain momentum, at least in the next 2 decades. The COVID survivors today, especially those children and teenagers today, will be the main focal point in the next 2 decades, and they will transfer the new ideas, the new cultures, the new socio-economic pressures that they learned during the social distancing and lockdown, for example, into the new potentials of business objects, the new potentials of investment and financing, like environment-friendly new business will arise, right? Tech, gaming, esports, online media, or tech-based traveling agencies will go, and they will start to mushroom in the next few years ahead. And so, what should we do in banking industry? We are having the urgent need for adaptive procedures, because we are now in transition risk, and that will affect both physical and liability risk. Stress tests are needed, most especially to anticipate the digital waste and cybercrime, because the long-term impact in the future is in jeopardy, because we need to make sure that internally the company can sustain for the next generations ahead. But externally, we need to also make sure that we contribute to social well-being and also bio-environment, sustainable development at large. So balancing between what we can get and what we can contribute will be important in at least beginning in the next 2 decades ahead. So I think I should stop in here, and I would even like to hear more or to discuss more with Prof. Garrett or Mr. Ronald Harford and other participants here. So thank you very much once again. A very good morning. Assalamualaikum, Shalom, Om Swastiastu, Namo Buddhaya. Back to you, Ingrid.
Thank you, Rizky. I don't know if everyone is as blown away as I am. I don't know, I cannot distill the essence of your presentation because it is so vast, because it points to the fact that the bottom line, which our financial services sector was engineered to create, was development, it was impact. But despite all the innovations with technology, the smartphones, TikTok, and everything else, at the bottom line is the fact that there's a value system which must be maintained, which must be met, so that Islamic banking, I know you touched on that also, it speaks to that core value system, but at the same time, it deals with the issue of profitability, which is the purpose of our financial services sector. And so I know we are going to have an interesting evening, afternoon, morning, or night, depending on where in the world you are, right, Professor Garrett? But as we do so, I will call on Mr. Hartford, since he has been in the banking sector and has seen all the phases of change which the financial services sector has gone through. So as we go into our discussion, I would call on him now to also share some words of wisdom with us. Mr. Hartford, thank you.
All right. Well, thank you for the opportunity to be on this panel, and I welcome each and every one of us who are there: Ingrid, Rizky, Kamala, Professor Bob Garrett, who I know quite well, and I see we have Peter as well on the panel. I don't know how my presentation will in any way equal to or challenge that of Rizky. Such a comprehensive and wide-ranging subject, right? That, as Ingrid says, leaves you blown away, and its relevance to our subject at large. But I will speak a little bit about what I know about, right? And the situation in the Caribbean is transitional. There's a lot of transition going on in the Caribbean. In the earlier years, the American banks left the Caribbean. And now it is quite easy to observe that it is the intent of the Canadian banks to either diminish their exposure or to exit totally. And we've seen these banks diminish their operations. Now that has ramifications for the islands involved, in that it limits the correspondent relationships the banks have that remain, because they will not be able to maintain the extensive correspondent relations of the cosmopolitan banks. And then that also diminishes the amount of capital that is available for financing. Now, I well appreciate that in some of the small islands, the capital needs are very limited. But in some of the bigger islands and the countries where things are happening, there is a great need for capital investment, and the local banks will not be able to satisfy them, right? I mean, just as an example, in the earlier days, finance for large hotels would be underwritten by the Canadian bank in Canada, not by the local bank. The local bank would have identified the transaction, and it would be financed by the Metropolitan Bank. And the same thing happened in the days of Barclays. What would happen is that Barclays would come and lend capital support by way of a guarantee when they didn't have enough capital to finance the operation. But now we have mega projects in the Caribbean, both in Trinidad and in Guyana, and the banks are not going to be able to play a part. Exxon has spent $9 billion already in trying to find and produce oil in Guyana. There's no bank in the Caribbean that can even finance any part of it, right? So you need foreign capital for those operations. So the reduction in the foreign banks has had two impacts in the area of correspondent banks and available capital. Now, as these banks have gone out, the banking business has become more and more complex and requiring more and more capital to be able to sustain its operations. And it's become a very capital-intensive business. You constantly have to upgrade your computers. The changing dynamics that is going on at the moment, you need to upgrade your software and your hardware on a regular basis. And these are large sums of money. And then you have the regulators coming in as well, who want more and more regulation over the operations of the bank. And one check recently, I know in Republic Bank, when the board wanted to know why we had an increase in staff. Where was it? Well, all the increase in staff was for regulator purposes, right? These are people there who are answering to the central bank, answering to the various bodies that are controlling the banks all day long, right? This is what has to happen. So it's very, very capital intensive. So the profitability and the sustainability of small indigenous banks, as much as we are proud of them, is being challenged, right? They will not be able to maintain the capital requirement, find the capital to be able to stay current in the needs in the financial situation. So in comes some of the bigger banks. You have NCB Jamaica that's come in and has expanded in Jamaica, has expanded in Cayman, has expanded in Bermuda. You have Republic Bank that has moved into a number of the operations. And you have some of the indigenous banks who have come in and bought out of the operations of Bank of Nova Scotia and Royal Bank and CIBC. So Royal Bank comes in and decides that they are coming out of the islands. And the indigenous banks see this as a great opportunity for them to increase their capital base and have a larger operation to be able to meet the customers' needs. And then comes FCIB. And here's another opportunity. But what happens then? The banks themselves are not able to take up all the opportunities that are available because they don't have enough capital. They don't have enough capital to take on the additional assets that are being offered to them as much as they would like, right? And they have not decided to go to the market to raise capital to meet it. So there are opportunities outside there that have not been met. In the case of Republic Bank, who took up a lot of the opportunities from Bank of Nova Scotia, that has been easily handled by Republic Bank, which has a large capital base. And then you have also the challenge of the larger banks, both Republic Bank and other indigenous banks, when they seek to go out to take up the opportunities that exist in the other islands. There is a jealousy or a concern that the deposits of the country are going to be controlled by Trinidadians, right? And Trinidadians, in particularly where there is a strong central bank ownership in the banks. So the banks, strong government ownership in the banks. Strong government ownership is a great negative for banks, great negative, right? And it inhibits the growth of the bank, and it creates a lot of suspicion going forward. So the future of the banks that have taken up these operations is limited, right? It's limited. They have not been able to accumulate enough capital to have a quantum leap in the size of their assets. So they have opportunities they can't take up, right? So the opportunity now comes whether the larger banks, both Republic or NCB, etc., would want to take it up. And in some cases, they're not interested. They already have enough exposure in the island. They don't want to have 100% of the market or 60% of the market. And indeed, the central bank would not want to see that. So it's almost coming to a position of stalemate, where the large banks are where they are, the indigenous banks. They can't get any bigger because of the market shares they have. And the small banks can't get any bigger because they don't have the capital, right? The growth of the islands and the development of the countries is limited by the lack of leadership, right? There is a great lack of leadership in the Caribbean, right? There are one or two countries that show some promise with leadership. And without leadership, you know, opportunities are not going to arise because people are not going to see the chances, and it's not going to go anywhere, right? And therefore, if you see what's happening there, the human capital that the bank has, the country has, is to a large extent seeing opportunities outside the Caribbean. So the top brains of the islands are going to the States and filling very prominent positions in North America and in Canada. So as they should be, because they're making the maximum utility of their talent and their skills. So that's going on. So what's filling it in the bottom? And there is a great reluctance on the part of the Caribbean islands to put in place an intelligent immigration policy, right? And you just have to look around and see what's happening in Canada and the United States. Lots of the top positions in the universities, in the doctors, in the corporations are being run by Indians and Chinese, right? That's because those countries, both Canada and the United States, have had intelligent immigration policy, encouraging them to come in, right, invest in the country, and to help develop the operation. And the country has done very well, continues to do well. Indians are filling the position, Chinese are filling the positions. I mean, there's no end of opportunity, but the intelligence has come in and enabled the country to sustain the growth that they require. One of the great challenges of countries in the next decade or so is to be able to sustain the population numbers. If you listen to what the Caribbean Development Bank has recently produced reports showing that in the future, and I forget the dates, let's say in the next 15 years or so, 10 years, the population of the Caribbean is going to contract. Now, you look around, you think, oh my gosh, we have so many people here in Trinidad, etc., and the country is going to expand. It's not, right? And when you look along very carefully now, and you see the population is aging. It's aging very much, right? And we don't have the immigration policies to refresh the people in the country to be able to sustain the growth of the country, because we're jealous. We don't want to have the political balance that exists to be disrupted, right? So we don't want people like this to come in, and we don't want people like that to come in. And there are lots of opportunities. You see all the disruption going on in Europe and the Middle East. An intelligent immigration policy would draw sufficient intelligence into the Caribbean to be able to fill the void that is being created by the emigration of our people and by the aging of the people, right? So in any event, some of the islands, particularly places like Trinidad and Guyana, are too small in the population they have. You can't go anywhere and be dynamic with a population of 1.3 million people. They're just tired, right? They're just tired. They haven't got anywhere to go, 1.3. This country needs to have a population of about 2.5 to 3 million people, right? This is what it has, right? Singapore has a population, if I'm right, about 6 million and wanting to go to 8 million. And that's the size of Tobago, right? The country needs people to be able to sustain its life and growth. And for banking, where we finance the needs of the people by their assets, right? The assets are their property, their house, their land, etc. If the population diminishes, nobody wants their house. The house is a surplus. You have business complexes being built in the past that have been made surplus. They don't want them, right? So that has a significant impact on the future of banking going forward, right? So nobody is thinking deep enough on what's going on. You take a place like Guyana. Guyana is the same size as Ghana. Ghana has a population of 30 million people. It's the same size as Great Britain. Great Britain has a population of 70 million people, and Guyana has a population of 700,000 people, right? In no time at all, in the demands of the development that's going on, you have a GDP that's growing at 30 and 40% per year. You're going to totally use up whatever in human capital you have. Totally use it up, right? And you will not have the talent to move forward. And companies will find a way to run their operation outside the country, so the country will not get the benefit of it, right? So immigration policies are very important for you to be able. Guyana should have a population of 3 to 5 million in the next 6 years. 3 million at least in the next 6 years. That's 3 times the size of its current population. And it needs people with vision and people with planning to be able to achieve these things so that the region can grow and prosper, right, going forward. I don't know if I've said enough about banking, but there is opportunities there for the lending. Guyana is very keen on agriculture, and I think there is a lot of opportunity for agriculture, especially since the commodities that have been produced in Europe are being dislocated by the war in Ukraine, right? That's affected it. So there's opportunities there for us to expand. And then don't forget, one of the greatest wealths of the Caribbean is this weather. It's this weather, right? You read and watch these huge storms and the flooding in Europe, the flooding in Central America, the fires in California, the hurricanes. Although we do get hurricanes, but they knock off the island and they bounce back pretty quick, right? But the country, generally speaking, has a wonderful weather condition, and people who are seeing very severe winters, right, severe flooding, all right, are seeking warmth, and then they're moving into Florida, and Florida is being submerged by the global warming. I mean, lots of very, very expensive apartments that I have friends there. When you go there in a rainy season, you can't get into the car park. The car park is flooded, and the first floor of the apartment is flooded, right? I mean, it's real serious stuff, right? Going forward, right? So that threatens those places. They have to find somewhere else. And if we could represent an attractive opportunity to these people, I think the islands will prosper again in Caribbean in tourism, right? And will grow. And if it has a sensible immigration policy that does not be so antagonistic to foreigners coming in, right? It would benefit the country, and the country itself will grow, and everybody else will benefit from it. Because if you deprive yourself of the wealth of the human capital, you will suffer down the road. And then maybe the last little thing I'll talk about is digitization. COVID has driven digitization in these countries big time. You know, the countries have seen the advent of the computers and the digital management of information, and have said, well, the Caribbean will take another 5 years for these things to happen. But COVID has driven these islands to modernize and to become digitized as soon as possible. And a lot of that has happened, thank God, right? So we advanced considerably with that. But when you look at what's happening, and it's very interesting to see, you have two new banks coming up. You have Answer Bank, which is going to be a totally digital bank, right? And then you have Sagicor in Barbados, indicating that they're going to set up a total digital bank. Now, those banks are not likely to have the huge overhead and branch networks that the existing banks have, right? We have huge branch networks all over the place that have to be maintained, and it's a big drain on the banking system to serve the people. So it'll be interesting to see how the digital banks operate, and what significant challenge they're going to represent to the local banks. Now, the metropolitan banks that have remained in Trinidad or in the Caribbean, both Royal and Scotia and FCIB, which is CIBC, have spent large sums of money in digitizing the operation, right? And I think that they have done a relatively good job. But what they have to do, right, is balance the transactional nature of digital banking with a relationship with their customers. And they've missed out on that. They've gone very strongly on the transactional nature of getting the transaction and not developing any kind of relationship with their customer. And the customer's not accustomed to that. Banking is relationships, right? So the successful bank will be the one that can balance the digitizing and the relationship. And these new banks coming in, I watch with great interest to see what's going to happen, because they have the opportunity of stealing a march, because the other banks have the overload of their history, which they will take them a long time to shed to be able to compete with these banks. So that's me and the banks. Okay. Over to everybody else.
Thank you, Mr. Hartford. That was a sterling presentation, which encapsulated so well the human element. Because to use your own words, banking is relationships. And in the midst of digitization, as we are focusing on the great wealth transfer, we have to remember that human component. And I thank you so much for summing it up in terms of intelligence. Intelligent policy, intelligence in terms of technological move forward, but also intelligence in terms of leadership. And so I don't know, I know that you started off on a note where you underrated yourself, but your presentation was no less fiery. It was different, certainly, and that provides for a really dynamic discussion this afternoon. So thank you very much for that presentation. Yes, so there is quite a lot of food for thought. I see, Rizky, you have unmuted yourself. You already want to contribute to this discussion that is unfolding.
Yeah, thank you very much. And I totally agree with what Mr. Harvard just stated before, especially if I may take crucial notes about the rural banks. I do agree a lot. We face a lot of phenomena in the world where rural banks actually become, they are potentials because they can be the initiator for the socio-economic development at large. But at the same time, yeah, we need to help them sustain as well, because I witnessed also that banks, especially in the small size, in the rural banks, they have more potentials to sustain, but at the same time, they also find some difficulties to get finance as well, to get funded as well. So this is also another point to focus in the near future. And about digital banking, I do agree totally with Mr. Harvard as well. Now, if I may add another point, is that investing in human capital for the future is also crucial, because if we need to transform, especially to transform a bank, we need to begin with shifting or inducing the new mindsets about the future, digitization as well, into the entire human capital. I would say human capital instead of human resources, because it has the sense of more responsible for the long-term well-being for the bank itself. As for the complete review and comprehensive reviews about Caribbean, hats off to Mr. Harvard. Thank you very much. I think that's all from me. Ingrid, thank you.
Yes, yes. Thank you, Rizky. So I don't know, Professor Garrett, can we have a word from you?
May I say something towards the end? Maybe ask if there are members of the audience or others want to come in. Huh?
All right then. So members of the audience, ladies and gentlemen, your input is welcome at this point in time. I know that so much has been said, which speaks to the bottom line, not just of profitability, which goes without saying, but it's also about the impact on after the expenditure and the investment of capital.
Well, if I may add,
yes, yes.
What is underpinning the success of that will underpin the success of the banks is good governance. Right? It's good governance, right?
Certainly.
Right, and it's not an easy job in these small islands to be able to gather around a board that is sufficiently diverse, right? well-rounded and interested in learning and developing themselves to be able to contribute to the board, right? And of course, underpinning all that is high integrity, right? You need to have people of the highest integrity. And then you need to also make sure that you not have people who have conflicts of interest, right? Because it's a small community and you have, they either connected to another director, or they're connected to somebody in the, strongly in the staff, or they have the biggest business is their business and so on, you know. So you need to watch all these things together. It's not an easy challenge, but it's fundamental, right, for the banks to survive. In the 2020s or thereabouts, a lot of the small indigenous banks collapsed, right? And the reason for it was very bad governance. You had Stanford Bank, for argument's sake, which collapsed, in the central bank in East Caribbean had to scramble. You had the Anguilla banks that had difficulty and had to bring them together and so on. There are a number of them, but it has to do with good governance. And in small islands, it's not easy to get the kind of human capital around you to be able to protect you from the challenges that are coming from all directions, right? Whether it is weather, whether it is global warming, whether it's changes in the marketplace that's coming down the line that you need to adjust and get out of it. You know, I mean, in these small islands, for argument's sake, they were very deeply into sugar, and the banks didn't come out of sugar. They knew sugar was going to go bad, right? But it just kind of, it's like a lobster in a pot, you know. You heat the pot up, the lobster's nose is going to die. It just skokes and dies, right? You just there. That's what's happening. You know, you have to have the strength of character to decide that the business that we're in is dead, right? And therefore we need to move out of financing sugar, or out of financing whatever the industry is, and to move into something else. And we keep bemoaning the fact that we're not exporting. But today, people want to export physical assets and so on. But the real wealth today, you look around, it's human intelligence, right? I'm constantly amazed as I read the Financial Times that this person decides that there is a shortage of nurses throughout the United States, right? And therefore they get all the nurses to come together and they put in a computer system, right? And there are nurses in New York that are needed in California, and they move from New York into California, there. And they float the company overnight, and it's $2 billion, $2 billion, right? Okay, somebody decides we need to look after dogs, right? And decide everybody wants to look after dogs. Everybody now has a dog, right? Because of COVID, they all have a dog at home. So they're all concerned about looking after their dogs, right? So what they do is they say, listen to me, I will look after your dog if you pay me $300 a month. You call me anytime, I'll look after you. And we look after your special services, guaranteed to have things. Everybody comes and they get all these vets together, bam, skalam, and they put it on the stock market, another $2 billion, just like that. All they have done is put a piece of software together, right? That brings all this together and brings the accounting together, right? So that it can be done seamlessly, right? We do that. Why can't we do that in the Caribbean? Why can't we do that in the Caribbean, right?
May I ask,
yes,
Mr.
yes,
Harford,
Professor Garrett?
Mr. Harford's moved into Ghana, a much larger country. What are you learning in Ghana, which is transferable back into the Caribbean?
This thing that you learn, is, when you're doing all your risk analysis, right? That ease of doing business and integrity of the country. When we go into Ghana, Ghana's ranking is better than Trinidad. So, whereas we think that going into Ghana is high risk, they think it's high risk for Trinidadians to come in, right? Okay, so it really puts a shock in your ego, right? That they have a better ease of doing business, better integrity, better whatever involved than Trinidad. So we learn from them, right? In that respect. I don't know what you learn a lot is the place is tribal, right? So it's you learn that people have natural loyalty to their group, which is not tribal in the Caribbean, right? It could be to the village or to the people or to your family. But if you're in an Ashanti, right, your first level of loyalty is to the Ashanti, right? And then we come down with the different levels of loyalty. And you have to keep all that in the back of your head when you're dealing with people to understand where their brain is, right? This is how they are. This is ingrained in how they run themselves. And that's new for us. We need to understand. So I think really what has happened here is teaching us how to think more widely, more broadly, right, about how one approaches problems, because they're different and they need to be understood, right, if you want to succeed, right?
Yes, thank you. So human capital has another component, another dimension in Ghana. But we have a question from Peter. Peter?
Yes, certainly. This is really for both Rizky and also for Ronald. I'm just overflowing with ideas as a result of this discussion, and I literally can't wait to replay the recording of this. But look, basically with the huge advent of digital banking, I've seen, of course, even banks that aren't really proper banks, they're not even making loans. They're almost like glorified internet payment gateways or money transfer services. And again, I'm working with a number of different sort of private bankers here, looking at banks to acquire, because the mindset of a lot of these tech people is to find a physical asset and put a tech overlay on top of it and then get a ridiculous valuation of 20, 40, 50x. But what resonated from both of you, of course, is essentially is that integrity and interface with the culture and the key people that you're helping. And I like the way that you sort of phrased it, Ronald, in particular about at the end, it's relationship driven. You cannot get a tech overlay specialist to even remotely contemplate to be a better banker of someone with 30, 40, 50 plus years in the industry. So we're seeing a bit of this sort of, let's just say these tech valuations, I think, are going to have a huge correction. They're already having a correction. But my question really is with regards to sort of your thoughts on the future of the industry, because I truly believe it needs to be a balance of course, relationship-driven banking, fundamentally sound banking with what I call real bankers, not technologists that are just transferring and moving numbers. But of course, the technology is great because it makes it more efficient. But I've just seen valuations of fairly boring financial and banking businesses go through the roof. I won't name names, but there's some of them worth several $1 billion, and they really do nothing. And I joke with one of my friends who's put out God knows how many tens of billions in loans in his life. I said, George, how long would it take you to put out $1 billion in loans and to get a loan book like that? And it'd be very quick. So what is your thoughts now on this movement in the banking industry towards digitization and these high valuations? Do you think it's going to be reined in? Because I'm seeing just so many great assets, banks, etc., where everyone's thinking tech overlay, big valuation. Well, I mean, what are your thoughts, Rizky and Ronald?
Well, at the risk of being quoted, you see a bank like Royal Bank. Royal Bank is a first-class, top-rated bank in Canada, right? They put in a top-notch technology in system in Trinidad and Tobago, but they have not adhered to good relationships, right? And they had a strong goodwill before, but while they were introducing the technology, were totally ruthless in the way they dealt with customers. They just closed branches and told them they have to walk take their business to 5 miles down the road or whatever it was. That's what they had to do. Now, that has left a bitter pill in the public's eye, and the multiple that they would have thought they would have got for the assets is not coming. It's not coming. But you have a first-class piece of technology inside of there, and you have a reasonably good base, but you have not taken the good quality bankers that they had, right, to help them run the operation. And they had good bankers. They were formidable competitors of Republic Bank, formidable, right? But they have not put them to run banks. So as you said, if you want to run a bank, you need to have a banker, right? You need to have somebody who understands the whole gamut of the operation, all right? And all the little sensitive areas that need to be attended to. And you have to be very alert to be able to handle that. And not just put in technology. But it's interesting to see how, as I say, these two new digital banks are coming. They've put in seasoned bankers to set them up. And I hope they don't forget their underpinning going forward.
Yeah, well, thank you, Rizky. Can we hear from you now?
Yes, yes. Thank you very much, Ingrid. And Peter, that was a truly brilliant question. And also it comes to my mind as well, the same anxiety that you already expressed before, that you believe in true bankers instead of more on the valuations and all of the algorithms. And yes, at the bottom line, I do believe that we humans have the real intelligence instead of artificial intelligence. So we should outsmart all kinds of technology. That's the bottom line. But if I may refer to some previous data, Forbes, for example, released the best online banks for digital banking of March 2022, namely Discover, Access Bank, NBKC, Quantic, Ally. You can find some new names that are not often heard by us daily, or even 10 biggest digital banks in 2021 by Top Mobile Bank, the financial brand. They named New Bank in Sao Paulo. Chime, Sao Paulo New Bank has 25 billion assets, and also Chime, San Francisco, USA has about 14.5 billion assets, and Sophie in San Francisco as well, about 9 billion of assets, and the rest is about 23.5 billion, or all of the rest of the banks combined nowadays, especially in several areas in the United States or even Latin America. And yes, it's growing, it's mushrooming, even in Asia, in Indonesia. More and more digital banking will be implemented, and more digital banks are also coming up. But at the same time, my concern is, first, I agree with Mr. Harford just now. It's all about relationship. Now that we have intermediary between the real bankers and also the customers, so we need to make it balanced. Firstly, well, digitization is coming up. This makes us inevitable to be adaptable, to be agile, and to keep on networking. I think that one is also another aspect that we need to anticipate in the future. But at the same time, now that we are currently in the new world of digital, so we need to find a new balance. So this is another challenge, that with computer intermediation, then relationship might be probably greatly reduced in my experience, or even in my analysis. So we deal with machine. Sometimes the speed, the velocity of the machine when they learn something. In so far as I learned with all of the implementations, I established some of the artificial intelligence in banking, in banks. Regular banks, Islamic banks, conventional banks, but they try to apply digitalization. So they make people able to communicate through WhatsApp, for example, through social media, just like communicating as with the real humans meanwhile it's just chatbot, for example. So I have established that for several projects. But then we also have to admit that when technology learns, they need even some time to learn about the new vocabularies, to learn about the sensitivities, to learn about the what do's and don'ts in terms of relationships. So I think for the future, we need to find the balance. This will be the new balance between the valuation algorithm centric and the humanistic relationship. And I believe the key still is in the human, because we do have more real intelligence instead of the artificial intelligence. So that's how I see it in an optimistic way. I'm trying to be optimistic instead of well, amid all of the disruption of the digital in the next years ahead. So I think that's my take, Ingrid. I hope I answered your question, Peter.
Yes, Peter?
Thank you very much. Yes, no, you absolutely did answer my question. Thank you very much, gentlemen.
Yeah, thank you. Thank you, Peter, for stimulating additional thought. I believe over the 3-day period, we are looking at the great wealth transfer. And indeed, the elements which we have touched on this afternoon, evening, night, and morning, depending on where you are looking at it from, it really would hone the whole issue and really take us further, particularly because, as Rizky said in his initial presentation in starting up, that at the bottom of it all, we have to look at the impact. Initially, it was just pure growth and development, but recent analysis of the impact of development has shown us that we have to, at all times, consider our environmental, societal, and our governance factors. And the Caribbean offers a great opportunity, but while there is opportunity, there are also setbacks. And I think Mr. Harford really went into those, the limitations in terms of our mindsets, which can be xenophobic to some extent. And really, the Sustainable Development Goals have really allowed us to unpack some of these components and analyze the risks which are inherent. And so as we are about to wrap up, I see we have another question from Peter. So Peter, yes, you can ask your question at this, or make your comment at this point in time. All right. So at this point in time, I will ask our panelists to give any final comments on the issue. Rizky, start with you.
Yes, thank you very much, Ingrid. Well, I think we have discussed and we have touched so many crucial matters. Well, I just need to add a little bit more thing that in the next future, the future is near. The future is no longer far away as we may predict it before. So COVID-19 expedites all of the incoming of the new changes, all of the shiftings of the new mindset. So we should be able to live in the new era if we need to sustain. If we want to sustain, we need to be adaptable, especially internally in terms of the governance. I do agree totally with Mr. Harford. We need to improve the new governance system because it's the backbone of the bank, and externally we need to anticipate the incoming of the new trends, the emerging new generation that if we don't live in their era, then we will be left behind. So between nostalgia, if I may cite Nicholas Badminton, we need to balance between the nostalgia, forward-looking, and then nostalgia. Learning from the past is good, but at the same time, we need to balance it with anticipation for the future. If we want to sustain. So ESG must be at the core, in my humble opinion. ESG must be at the core of the new future governance, risk, especially for risk management system in banking industry. Not to mention about the upcoming of the digitization era in banking industry as well. So I think that's all. Thank you very much indeed.
Thank you. And it really is, it has been a wonderful afternoon. And Mr. Harford, I'll just ask you for any final words because I think we're about to run out of time.
All right. Well, my quick words are banking is in a transitional mode in the Caribbean, and there are opportunities. If you listen to what I said, there are lots of small banks that have opportunities but don't have capital. And if the countries do not have a xenophobic attitude towards the receipt of capital, there's a lot of opportunities for capital to come in to work with the local banks, right? To be able to double their size and take the opportunities. And in some of those opportunities, some of the digitization that Peter speaks about could possibly come through. But remember, however, that you always have to pass the regulators, right? And the regulators have a mindset, right? And their attitude all the time will be, how are you going to be a good banker for the people of the country afterwards? They're not impressed with just capital. They want to know how are you going to benefit the country going forward. So you don't forget the regulator. You need to spend a lot of time thinking about how are you going to deal with the. There's a lot of opportunity. The world is in transition, and in that transition, opportunities abound, right? So just study the opportunity and go with it, right? Go with it.
Thank you. And thank you, Mr. Harford and Rizky. And really, we are grateful for the leadership offered by the Caribbean Corporate Governance Institute, which allows us to really be a part of such stimulating discussions. I thank you to our wonderful panelists this afternoon, and thank you to CCGI as I hand over to Peter to close this afternoon session.